Hello, Face. How's everyone doing today? Andre, Ace, Anders, how are you? Antonio, Catherine Oxby, Claudia, how are you? Everyone doing okay? Spencer, Nick, John Geiger. Hi, Ayaz. Nice to meet you. Mark Hinman, Nick, Natish, all my trading warrior brothers and sisters in the house. Look at that. Hi, Zig. Yes, Pinky. All right. You can get this work from Blake and the team every day. This is on the blog, okay? I'm having a little hard time talking today. All your pips are awake. I hope they keep raining down on you, Claudia, so you have a bumper crop. All right, so Blake published this a few days before Swiss got to 102. So can you imagine, this is just our free stuff that if you followed, you're not catching the majority of the move, but Blake is showing you his bias, probability of scenarios, and can you imagine what it's like in the private members chat when all day long they're sharing charts together, okay, while things are happening. So again, the tip of the iceberg here, you know, and he did the same thing with the Dixie before we had the big pop, his bias, okay, same thing. And we are threatening that breakout. So anyway, here's another resource for you. I'm going to turn it over to Blake pretty soon because my mouth is very sore today. You can probably hear it in me. So I'm staying laser focused on crude. Okay. So yesterday when it was here, I said it was a turnaround Tuesday play. If you were quick on the trigger, you had 50 pips. But this high right here we had in crude was the first non-confirmation on the 1 hour. We already had it on the 4. Right? Confirmed high, beginning to diverge. And now what I see is either we get a failing rally here or maybe one more drive. Okay, 1, 2, 3. Of course, you know, you could just sit back and let it do whatever it wants to do. But back underneath this rectangle, whatever you want to call it, is going to be a sign that there's something wrong. This is also one of Blake's favorite setups is failed breakouts. So we've had all week above this line. It broke out Monday. Today's Wednesday. Let's see how long it can hang above this. Well, and you know, we could be on our way to 70. You know, I'm open to anything happening, but I am beginning to see momentum wane. Okay, on a lot of different time frames on the 4-2. Okay, so even if we made a new high here on the 4, we would not confirm. RSI is a little higher than I like it to be. 68, it's okay. So we'll see if we get that third drive. If we do, I'm going to take a shot up here. Already have a piece on from yesterday. And as you can see right here, the 50-day on the 1 hour actually supported it. And we even get back under 75. I see a lot of space all the way back down to the line. So this is key for today. If it gets taken out today, if it gets taken out tomorrow. Anyway, this is going to be your first sign that perhaps we're at least due for a correction in the crude oil market. Okay, everyone with me? Give me a Y if you are. One other thing I want to show, and it should mean US dollar yen heading lower if it's a correct count, but the 10-year yield, I was actually looking for 265 or so, and maybe it's still going to be one more thrust. You know, maybe this is ABC, but it's also starting to look like, you know, a little bit of a breakdown here. Left shoulder, head, maybe right shoulder that would measure down here. But again, my daily belief on it, whether there's one more pop or not, yields are going to take out this 234 range in my view. Now, what's going to be the catalyst for it? Strong dollar, the Fed, I don't think so. Risk off, maybe some decade. Anyway, it doesn't matter. I'm looking for one more shot down, whether we have one more jiggle. And look at this 260 range. That's where it broke down. So I think we're going to take out this low at 235, which is something ForexAnalytix also called all the way back there. And God, you know, even I saw it as a real nice little 1, 2, 3. So you're patient and you wait for these, they work. Classic divergence. So Blake, I'm having a little difficult time talking today. You want to come in and...
Yeah, what happened? You got punched in the chops?
Yeah, by you know, a drill and some tool that clipped a piece of my bone off my tooth, and yeah, you know what? I'd rather be punched in the mouth.
Wow.
I've
So,
taken
in other words, you went to the dentist.
Yeah.
Oh God.
Now I know why that. You know, they have some of the highest suicide rates because you know what? Everyone that goes there doesn't want to be there.
This is a true.
The happiest part of a visit to the dentist is leaving, and then you have to remember him for a few days of the after effects. So,
oh man, I tell you, dentist is definitely one of those places I do not enjoy going. And you know, you know, I avoid doctors' offices like the plague.
That's why you're healthy, Blake.
Yeah, in my own head. In my own head.
You are. You are. You get around a golf course when it's 98 degrees. You have to be healthy, or you pass out.
Oh, I almost passed out. Believe me, that was the worst I've ever felt coming off a golf course.
Anyway, Blake, you know, I opened the show. Your you know, chart of the day to keep the confusion away. It's always great work. I mean, if people aren't paying attention to that, you know, bonus for free, you know, you can make a living trading off of your chart of the day.
Yeah,
real nice work,
if
man.
Like that, just think what happens with all the analysis that you get throughout the course of the day, and you know, throughout.
That's what I mean.
You know, just all the analysis that comes.
Show them all the action junkies in there today, Blake. Show them all those.
You know, I mean, here's the thing. Let's talk about like I'm going to talk about the elephant in the room, which is going to be the euro and the dollar index. So let's discuss that because that's really going to be my focus today and moving forward. Now, you could look at all the other majors, and you know, obviously the Aussie's down because of the the CPI numbers, and so you guys know, I do have a pattern in play in the Aussie New Zealand. I did add to my position overnight on this dip, and as you can see, we're holding here. My invalidation for the Aussie New Zealand is 106.10. I really don't want to see the pair below 106 again. That doesn't mean we won't see below 106, but we had to reset, and we got that following the weak CPI numbers overnight. So
let me ask you, when you add to a winner like this, I know you're long from the low. Mm-hmm. Do you add less, same amount?
Yeah, because because I have room to add more, because what I've been doing is taking profits along the way, and I still have I had a small piece. Now I'm adding back to it on this dip.
Got it.
So I'll add little pieces as I believe that, we might, drop below 106. We might didn't want that. There we go. We might get down to 105 and change, but overall, I have to keep in my mind the overarching theme of why I'm long the Aussie New Zealand in the first place is that despite the RBA probably is going to be a little bit more dovish now with the weak CPI numbers, the RBNZ is already dovish. They are, and that was as I made the case of a few weeks ago, a seismic shift in expectations from what the RBNZ was. Everybody already expected the RBA to be weak. Now everybody's thinking, hey, the RBA is gonna, is probably gonna cut rates next month, and so be it. That's already been kind of factored in, and we just got weak CPI numbers that came in flat quarter over quarter. Market was looking for 0.2%, and we already knew that was coming. So that's why I'm buying the dip now in the Aussie New Zealand. The question is, how far will it dip, and can it dip even below 106? It can. It will invalidate my pattern in play, but it doesn't mean that I won't continue to play the Aussie New Zealand on the long side. I'm reestablishing a full size position to eventually look for a move towards 108, 108.50 or 108.30, but hell, I think it can go even further than that. So and especially with some sort of China-US trade deal at some point. So again, I'm reestablishing a long position in the Aussie New Zealand. I have a lot of room to add, and I've already started doing it overnight. Okay, so let's go back to what I want to call the elephant in the room, and let's talk about the dollar index, and let's talk about the euro. So the dollar index, it is a longer term. This is a bull flag pattern, or a bullish wedge pattern. So what makes, and let me actually, let's get rid of this really quick. I'm gonna do a few drawings here for you. Let me figure out where all these fib levels are being drawn from. Let me get rid of this one. Okay, and then I can redraw. All right, so what makes this chart that you see here a bull flag pattern? Can anybody listening in tell me why that's a bullish wedge pattern? Why is that a bullish wedge pattern? If you guys want to answer, go ahead. I'm looking at your answers right now. I very rarely stare at your comments, so I am doing it right now. So Gerald says equal highs, higher lows. Correct. That's a great answer, and I know there's the rest of you guys are answering, but yes, correct. Consistent highs or equal highs. You can see one here. Let me grab my pen. I know I explained this on the week ahead video, but I can draw better on the GoToWebinar platform. Is actually easier to draw on here. So you can see these equal highs. Okay, and higher lows, right? Higher lows, higher lows, higher lows. We could still at this point in time drop down to 96.30 and still maintain a bullish bias. Okay, so this is what's called a bullish wedge. Now, what that means at this point is that chances are that we break higher. Oops, I didn't want to do that. I have to switch back and forth. Okay, so chances are, and if I had to throw a percentage on it, there's probably a 60 to 65. Trying to freehand right here. Believe me, my handwriting is actually quite good. Believe it or not, not via a mouse. 60-65% chance that we break higher, and maybe a 35 to 40% chance we break lower. Okay, so there's that. Okay, so does that mean we can't break lower? No, we can break lower. And then there's other things that could alter this chart quite aggressively too, or we could see a breakout to the upside, stop out everybody who was short. So anybody who was short had stops here, here, they're all getting stopped out, and then we reverse hard, and then you get a massive breakdown. That could happen too. That's not out of the question. But the initial move has a higher probability of moving higher. Doesn't mean it's going to happen. It just means that there's a higher probability of that happening. So now if you factor in the reasons why the euro dollar will probably, or the dollar index will probably break higher, it's usually in, regarding the euro, and because the euro makes up, sorry, I didn't mean to yawn on you guys, but the euro makes up 50, I don't know, what is it, 53% or 56% of the dollar index. So, obviously the euro is going to have a big influence on what the dollar index does. Now the euro
I can't talk. You're yawning. What's Steve and Stell going to do when they come on? Belch?
They might. That's quite possible.
It's a dream team.
Yeah. So the euro dollar, is one of the reasons why it's under pressure is the continued weak data that we see out of Germany. And you can see the contractionary numbers coming out of the PMI numbers that have been the manufacturing PMIs. A lot of people would argue that Germany's probably already in a recession, and the rest of Europe is headed in that direction. And really, even with the German IFO numbers that came in a little weaker overnight, I am a little surprised that the euro didn't trade towards into the 111 levels overnight. I'm actually quite surprised. When I got up this morning and I looked at the numbers, I'm like, shoot, what are we doing up here right now? But what I am looking for eventually is a break lower in the euro. Now, one of the things that I'm looking for at this point in time to be the catalyst of the euro dollar, or actually, I'd take that back, of the dollar index breaking higher, it can be the euro, which I think it's going to be the euro, but there's actually a little bit of a catch here. But could other currencies drive the dollar higher? Well, if you look at the cable has a bearish breakdown of this wedge, and however you want to draw it, you can go, oh well, Blake, there's a maybe it was like a triangle like that. I don't care. It's broken all sorts of support. This is all horizontal support through here.
It's right out of a textbook, Blake.
Well, yeah, I mean it's a bearish wedge, and it's already breaking down. So that is one of the reasons why the dollar index is that much closer to these highs. Now, if the pound, which is at its highs of the day right now, I don't think it's going to stay here, but it is at its highs of the day. The pound, if it continues to break lower, which I think it will, that is one thing that will help the dollar index approach that breakout point. But also, the S&P may adjust ratings on Italy on Friday, and if they downgrade Italian debt, that is, in my opinion, going to be the nail in the coffin for the euro dollar. Now we're talking Friday, so can the euro start breaking down ahead of that? Yes, it can, and I'm hoping it will. I'm hoping for some move out of this wedge to today, tomorrow, Friday. Hopefully today would be preferable, because I like to see a move happen like immediately, as we all wanting immediate gratification in the FX market when we're trading. Yeah, let's have it happen like today, but that doesn't mean it's going to happen. We've been in a sideways trading pattern for so long that you got to be a little bit patient here. However, I think the euro dollar is on the cusp of breaking lower, and what we have to look for is when, if the euro starts breaking below this 111.80. Excuse me, I had to yawn again. I didn't sleep too well last night. I don't get a lot of sleep during the week. I usually sleep about 5 or 6 hours a night, but last night was like not restful sleep. I was I was up quite a bit throughout the course of the night for no reason other than I think my wife swapped out the comfortable pillow with the less comfortable pillow, and I paid the price. But anyway, that's neither here nor there. That's why I'm yawning. Anyway, the euro dollar I think is going to slip below the 112 level, and should we get below 112, we might start tripping some stops, and below 111.80 is going to get a little bit more. What's that? What? Hello?
He just wanted to interrupt you. That's all.
Oh yeah, I know. All I heard is and I figured that was Steve stepping in to talk about my pillows or something.
Sorry, that was totally my mistake, Blake. I'm still on a business call, and until I had a second to mute myself.
Oh, that wasn't English. That was Greek.
No, actually, that was English. Speaking with Joe, and as far as I know, he doesn't speak Greek.
Oh, okay. All right. Sorry. Okay, I'll continue on here. Anyway, so what I think is going to happen is the euro is going to eventually break lower, and maybe we might need a gentle shove in the dollar for the dollar index, like by the cable. The Aussie is already, obviously very weak. The Kiwi's weak. We do have the Canadian that is that's moving a little higher today. And by the way, I'll just kind of show you that the Canadian broke out of the triangle. I've been warning everybody in our chat room, don't be shorting the dollar Canadian. It's up in your face. Now we do have the Bank of Canada today. That's happening in an hour and a half. And I'll let Stelios maybe talk a little bit more about the Bank of Canada upcoming. But I'll tell you this, that the Bank of Canada has been, relatively, I don't want to say hawkish, but they've been steadfast. And if Polas continues to be neutral, that could be viewed as a positive for Canada or the Canadian currency. But if he tilts more dovish, we could see the dollar Canadian rally significantly further, especially considering the fact that crude oil is as strong as it is, and the Canadian is not responding. And frankly, if you look at crude, I mean, crude still looks like it's going to $70 here. So with this bull flag pattern, so that continuation in crude oil has not been able to support the Canadian currency. So what happens if the Bank of Canada is a little bit more dovish? I mean, we could see the dollar Canadian stretch its legs up towards 135.50, 136. I think it's entirely possible. Anyway, one of the other things that I wanted to let you guys know is I was shorting the dollar Swiss yesterday, and I think I talked about that. I don't know if you did. Dale, did I talk about that?
Yeah.
Okay.
You showed where you were scaling in and your stop, and it was the planned trade, the whole deal.
Yeah, and you know what? I got some pretty good clips short yesterday at this 88% retracement, and my cost average was like 102, 102.05 or something like that. And I got out of it at 102.02 because the dollar was so strong yesterday that I'm like, okay, in the event that I go to sleep which would be last night, and I was talking to myself yesterday, I'm like, if I go, we have the dollar so strong, if the dollar index actually ends up breaking out overnight and I'm asleep, with the IFO numbers, I was thinking ahead, thinking, okay, well, if these German numbers are actually really weak and the dollar index actually starts breaking out, I don't really want to be stuck short the dollar Swiss. So I covered my short, and then I put in an order to sell it again right here, which obviously never got tripped. I still have that orders open right now. I have an aggressive order to sell up here at the 161% extension. It just never got there. That's not saying that it won't, because if the dollar index breaks higher, it's gonna pull probably the dollar Swiss back up again. I am willing to short it at higher prices. Obviously, hindsight's always 20/20. So when I got up this morning, I'm like, gosh damn it, I was on the right play. I was on the right side of the trade. I should have just stayed in the trade. But you can't make those decisions after the fact, and you can't beat yourself up, because the reason why I closed my position, you have to put yourself in the situation yesterday. When yesterday the dollar Swiss looked like this. Let me go ahead and yesterday the dollar Swiss looked like this, and I'm short here, and I'm thinking, all right, well, the dollar is closing on such a strong note that there's a chance that it rips to new highs, and then I can short it again. Now it obviously didn't, but the risk was there, and that's why I decided to err on the side of safety, which in hindsight wasn't the right decision, but at that time it was the right decision, and I feel good about it. I'm a little irritated that I would have made a pretty substantial amount of money on this downdraft overnight, but that's okay. I can't beat myself up for it. It was the right decision at that time, and I'm okay with that. So Ziggy says, hint hint, Blake wants a pillow for Christmas. We have you guys might laugh, and I think we have some. Do we have data coming out? No, we don't. So I got a couple minutes. We have like a bunch of pillows. I'm never happy with my pillows, and I've probably got, and I'm not exaggerating, 18 pillows around the house, and I'm always in search of the perfect pillow, and it's a never-ending search. But I'll tell you what, the pillows that we have, I think we've had them for like. The
pillow guy on TV, Blake. Have you tried that one?
I've heard they're really good. I've heard they are really good, but I've never tried them. So
okay, well,
I keep thinking, well, why am I going to buy that off TV? They can't be that good, maybe.
Give it a shot.
I might have to give it a shot, but
trickle down economy, Blake.
Yeah. The perfect pillow does exist. It's called the wife.
No,
okay.
The romantic, sappy guy.
You Greeks.
Oh yeah.
Me, I'm like a furnace. I'm a furnace. I can't have body heat on me because I'm already my skin is already boiling. So yeah, my wife, she's so irritated because I don't like to cuddle. It's like because it's hot and I'm hot, and I don't want your hot body near me. So she gets irritated about that. But what can I say? All right, guys. Well, hey, I'm going to pass it over to you. With that being said, that's too much information. So how you guys doing? Good morning, Stelios, Steve.
Hello. Good morning.
Hey. Good morning. How's so what are we expecting with the Bank of Canada today?
Well, obviously, I think pretty much everybody's expecting an unchanged rate. That's a given. The question is, what the commentary is like, what the forward guidance is like. The thing is, the past meetings of all the major central banks, they've been on the dovish side because the global situation has been deteriorating. Economies are not doing that well. We have the trade wars, we have Brexit, we have all that. So there's no way, in my opinion, that the central bank can come out all guns blazing and be hawkish. Having said that, actually, with the exception of Norges Bank, which has been relatively on the hawkish side, but it's a different matter because they have high inflation. So the question is, what is the market pricing in? Because we know that they're going to be probably on the dovish side, but what does the market think? And in my opinion, the risk is that the Bank of Canada will not be as dovish as people expect. If you look at the DSI, if you look at positioning,
right,
it's all pretty short. DSI is at 10, I think, for Canada, and the market's quite short Canadian dollars. So my opinion is, if somebody said to me, trade, put a trade on before the meeting, I would go long Canada, as in.
So you'd be short dollar Canadian, is what you're saying?
Yeah. But that's just for what's actually priced in, what I think is priced in for this meeting versus what might happen. It doesn't mean that I think that in a week's time the Canadian dollar, USD CAD is going to be lower. But I just think, given the sentiment and what I think is priced in, I think it's probably that's the way I was going to be. I'm not going to have a position in it, but I'm just outlining my thoughts.
Great.
So okay, so that's Canada.
Hey, I'm gonna pass it. Steve, are you here?
Nope.
Okay, he is here. All right, my office just came online, so I'm gonna have to go chat with those guys for a bit. So I want to wish you guys a great trading session, and thanks everybody for being here today. So, and Steve, you can continue on talking about my pillow.
I'd rather wait for you to come back for this.
All right. See you guys. All right. Bye. Okay. Thanks, guys.
Thank you, Blake. Two more little things I just want to.
No, Stelio, take as much time as you want.
Okay. Well, I wish I had more to say, but really, there's not that much happening, as you know. So I'll start with the Aussie. Blake mentioned it. We had the CPI came in weaker than expected, so 1.3% year on year versus 1.5% expected and 1.8 previous. So this is going south, same way as Eurozone inflation is, and even UK is dropped just below 2%. This is reported inflation. We've talked about this many times, what real inflation is and whatnot. But globally, again, with the exception of Norway, in the major, the major countries, it looks like inflation is trickling lower, and so that's the reason why the Aussie was underperforming. And even with oil prices, inching higher lately, reported inflation is still not gaining a lot of traction. So that's what's been driving the Aussie, just like Blake said. And then we also had German IFO Business Climate Index, which came in below expectations. Again, another reading out of Germany, which is negative. Okay, this is only marginally below 100, but we've seen PMIs, manufacturing PMIs below 45. So that's it's a pretty low reading. And Germany. Manufacturing, I think it's about 25% of the GDP. So it's a very important thing, and Germany slowing down will definitely have an effect on the Eurozone as a whole. I mean, it goes without saying.
Unquestionably.
So, and there's no, it's not like the rest of the Eurozone is firing in all cylinders and can actually take such a hit. It's
don't worry, Greece is going to make up for the rest.
I mean, look at the major European countries. I think France has all sorts of trouble. Italy, let's not talk about Italy. The Netherlands. Okay, Netherlands actually is probably one of the countries that is still doing relatively well, but it's definitely not looking very rosy for the Eurozone. That's for sure. And that's it. We haven't had anything on Brexit recently. Easter is over, so the UK
and I miss it so much.
I know.
Kidding, of course.
But Easter is over, and the UK Parliament it's come back in, so we should expect something in the near future. Because we had an extension until October, which is 6 months, but they have to start. They have to start looking at options, and we're going to go back to the whole Brexit saga, which is unfortunate, but it's coming. It's coming for sure.
Yeah, I'm afraid that we're going to have more of that, at some point, and it's going to last for long until we get some kind of a resolution once again. But it is what it is. It's not that we can do much about that.
Yeah, absolutely. And that's it, my friend.
Anything else?
Much else? No, I'm afraid.
Okay, perfect. So let's go over the charts. We have had some movement. I mean, things are better today than they were, of course, the past few days, especially with Catholic Easter. It made sense that we had too little movement. Already mentioned, but I wasn't here because I had a lot of meetings. So I know that Blake mentioned the Aussie. I'm not sure though, what he's looking at exactly. So I'm going to go through it very fast. That and Aussie yen as well. The Aussie pairs in general, actually. So Aussie, as I was saying yesterday, got rejected from that zone, and it's now on a confluence of supports, as you see here. 70.20, 70 cents 20 is the confluence of this ascending trend line support from this triangle, and also a horizontal support resistance area. If actually the Aussie breaks through that area as well, I think that then we're looking for a continuation lower. Aussie yen, as you see, I said yesterday that we were back testing this potential triangle support, resistance and support, and it would be important to see what would happen from there. Obviously, we sliced through it like it was butter, and that's definitely not a good sign for the bulls, because now we're looking lower towards this trend line once again, which is like roughly at 77.70 at the moment. Aussie Kiwi, given the move that we had yesterday, finally pulled back. It was looking like it was consolidating before continuing higher towards the 1075. But as it seems, after several days of consolidation, it finally snapped. So now next area of support is at 1062. So far, nothing less than a corrective move. I mean, that's not enough to undo this big breakout that we had. Keep in mind that the daily RSI from oversold territories reached roughly 80. So, it was due for a pullback. And as it seems, that's the case. We are getting some type of a pullback. Now, Euro-Aussie, that's actually an interesting one, because, depends on if you wanted to see this as, an ascending channel on the 4-hour chart. I actually had it as a horizontal one. So, as you see, if you want to look at it as a rectangle, there it is. As a rectangle, we more or less held the rectangle and pushed higher from here. So Euro-Aussie remains in a range, but the best one was Pound-Aussie. I showed that yesterday. I haven't changed the chart since then. I said that we are in a descending channel, and we need to break above this confluence of resistances at 184.20. But if you look at it on the 4-hour chart, we had a descending wedge. We had a little overthrow below the descending wedge. It is very, very usual with wedges to see an overthrow. So in this case, we sliced through it, temporarily, and then we moved higher. We consolidating, as you see, in a very, very tight range, and then we exploded higher. So I think that's quite a bullish development. Considering that on the daily, going back to the daily now, we're currently testing a confluence of resistances. Why? This is the 50 daily moving average. It's also this horizontal support resistance area. It's also this descending channel resistance. So all of them passing roughly through 184.20 to 184.60. So it's, let's say, a 40 pip zone. As you see, at the same time, which I do pay attention to those, the RSI is poking its head above this descending trend line resistance. So RSI perhaps leading price itself in a breakout. So I do think it's interesting, given the fact that the price action to the downside definitely didn't look impulsive in nature. It looked more or less corrective. So a break above there, in my opinion, should target once again this expanding megaphone formations, expanding triangle. You can call it whatever you want. Both definitions are valid, which currently passes from 189. So, a decent upside. I mean, once we confirm a breakout, it's going to be roughly like 450 more pips of upside. So I think that's probably a decent proposition. Okay, as a potential trade. Keep in mind that this is already a very long white candle. Usually, long candles show, not usually, they always show acceleration in momentum, and usually, with the exception of being exhaustive, which in this case, finding it so early after a reversal, the chances that this is some kind of an exhaustion move are very, very low. I would have to say that, the nature of this candle, if this is how we close the day, is also indicative of a price action that you should expect to produce continuation to the upside. So Pound-Aussie, not a bad one. Dear Steve, may I know your view on gold? It seems like it's moving up today. Also, Prime Minister May is trying to expedite Brexit and Pound USD. Do you think it will start to rally up? Please advise. Thanks. Okay, so 2 questions in essence. One of them has to do with what the pound is going to do. and the other one has to do with gold. I'm going to go over all the precious metals, so don't worry about it. But let's have a look at the pound. So pound definitely not the cleanest, pair to read. The fact that we broke through 130 is 129.80, 130. This zone is definitely a bearish event. But of course, we need to see some continuation. This was a confluence of supports. We did slice through them. So, from a technical perspective, do I like pound to the upside from here? No, I don't. Do I think it's impossible, despite breaking through 130, for pound to find a bid and move higher? No, I don't, because, the price action here has been very, very choppy. And usually when you don't have clear trends or when you don't have, a lot of volume, you can more easily find, I was actually mentioning that yesterday, you can more easily find false breaks down, up, or whatever. So other than that, I can tell you one thing for sure. As long as this descending trendline resistance is holding, this blue one, I have no reason to want to be long the cable. Okay, so we can discuss about potential upside in the pound, but so far it looks to me better buying the pound against the Aussie if we break up than buying it against the dollar, especially against the dollar, since I mentioned that yesterday. Again, since look at the DXY. The DXY is exactly on this long-term wedges resistance. So yeah, if you want to do something, with the DXY, of course, you can say, okay, I'm going to short it because I have a very tight stop loss, and that would make sense. But it looks to me like a break to the upside looks more or less inevitable. I mean, it looks like not inevitable, but it looks like a very high probability scenario at the moment. Despite all those rejections, the DXY is holding very, very nicely. It's once again at resistance. It has been unable to produce any follow through to the downside every time we've turned lower. And usually it's like a beach ball. The beach ball example we've said that, you can keep it underwater, but, every time it slips a little bit or whatever, it just wants to go afloat and jump. That's what the situation seems to be with the dollar at the moment. So I would be very, very careful being long anything against the dollar as we speak. Okay. Regardless, if you really want to be long the cable, you would definitely want to see this descending trend line break the upside, which currently it would mean something like a move above 130.30. Okay. Until that happens, really no reason to try your luck there. Now, having to do with the rest of the metals, and then we can go to other stuff. So gold. Gold did make it to the next area of support I had indicated down here. My target actually was 1265. I didn't move it. It's still at 1265. I didn't get triggered, to take profits on the last part of my position yesterday because we stopped shy of that. And we seem to be rebounding, but, so far we have an inside day today. So do I think that, the fact that we tested the support zone and are holding for now turns gold bullish? No, I don't. I think that as long as we remain below 1280, gold should be considered as bearish, at least in the short to medium term. Silver also, once again, toying around with this confluence of supports at 1480, previous rectangles resistance, the 61.8 of this move higher, still remains very, very weak. I mean, retesting the support zone. The good news, if you're bullish, is that it's still holding. The bad news is that despite it holding, we're not seeing any real rebound from it. So, inevitably, if it doesn't manage to actually strongly rebound from it, it will slice through it. And once it does, I'm pretty sure there are a lot of stop losses below 1480, and that's definitely not a good sign. Another one here for the coach. I know that he loves the gold-silver ratio. Gold-silver ratio consolidating at around 85, 86, still remains in a long-term uptrend. It is, though, a wedge, so I would be a little bit careful if we retest the highs. But for the time being, nothing to do here in the middle of this range. Platinum consolidating.
Thank you, man. I love that more. I love that more than women. the gold-silver ratio.
I seriously hope. I seriously hope you don't.
All right. Well, lately I do.
Okay. Whatever makes you tick. Whatever makes you tick.
I'm going to take my laptop out on a date with the gold-silver ratio sitting next to me on the passenger seat.
I've heard worse than that, but okay.
That's my blind date. All right, buddy. Thank you, Steve.
Going back to platinum, the good news about platinum is that it's still holding after a major break higher. We had this very clearly defined rectangle. Actually, it looks a lot like silver, some time ago. I'm not following track of fractals, but it does look a lot like silver before it broke out from the rectangle. And as long as we're holding above this 875 area, I think that it is, it should be respected for another move to the upside. So I wouldn't be short platinum in essence. Palladium, on the other hand, the more price action and the more the price action unfolds from here, the more it starts showing characteristics of probably fourth wave triangle here. So I still believe that there is a decent chance there is more downside for palladium towards 1265. I still hold the last part of my position, hoping to see 1265. Now, having to do with copper. Copper barely holding on this trend line support, so let's see what happens from there. We still don't have a definitive break higher or break lower. If either of these trend lines break, I think we should see some continuation. I would still want to see one last push higher before lower, but that doesn't mean that it's going to happen. From a technical perspective, though, I would favor something like that. Now, Kostas was asking about crude. Nothing has changed, in my opinion, having to do with crude. Crude is on major resistance at the moment, right here, $66. I got triggered yesterday. I'm short. Now, if we do break above it, the next area of resistance I would be looking for is actually at 68. So I don't see any real resistance between here and $68. That's why I like to scale in, because I can't rule that possibility out. Okay, now, do I believe that crude is going to roll over sooner rather than later? Yes, I absolutely still believe that. I still believe that we're at the very last phases of this move higher before we see at least a much, much deeper corrective move. I would expect a move back towards $58. It is a very, very decent likelihood that that's going to happen along with some risk of move. Now, some information, I don't know, Coach, did Blake mention at all, because as I said, I jumped on the webinar very late. Did Blake mention at all DSI readings? Okay, Coach is not here.
Hey, we mentioned DSI for Canada. That was it.
Okay, let me show you some interesting stuff though here then, because those are things to pay attention to. Sorry, let me open it again. There it is. So, look at this. There are a few readings that really catch the eye. Swiss franc, DSI 7, Nasdaq 93, S&P 88. So the average between Nasdaq and S&P is 90.5. Okay, so that's very, very overbought. Now let's go to crude. 88, heating oil. 87, dollar index. 86. So as you see, things are getting quite extreme in DSI ratings. So I do think let's see what.
Frothy. Like your
frothy.
cappuccino.
Yes, exactly. By the way, one of the things you can enjoy in Greece is definitely good coffee. I can tell you that much.
Yeah, that's it.
Canadian dollar 10, as Blake mentioned. So keep that in mind. I mean, things are indeed becoming very.
Steve, what I noticed there, and I know it's not our bailiwick, but grains, there has to be something happening there in grains. They've been so low on DSI for so long that I haven't even looked.
Many of the commodities are beaten down. Just let me read to you the commodities, so you see that all of them are, the sentiment in all of them are near or at extremes. Corn 9, wheat 12,
the grain,
soybean 6.
I've never seen 9. Soybeans at 6. You ought to pull up a bean chart.
9, soybean meal 14, orange juice 7, coffee 16, lumber 6.
Orange juice is, where's orange juice? Because I have to call Eddie Murphy and
7.
Dan Aykroyd.
7.
Oh my God, they're going to make a killing on the floor today. Those guys from trading places. The Dukes are in trouble. The Dukes are going to lose their memberships here today.
Indeed.
The Duke brothers.
By the way, we have
I must still have Novocaine in my system. Go ahead, buddy.
we have a question about CAD yen. I said yesterday CAD yen seems to be consolidating here, so really no real trend here in CAD yen. I was long, I got stopped out at break even, and I don't like it anymore. I mean, I was expecting some continuation, but after you start seeing price action like this, you just don't want to get involved anymore with it. We also have questions about pound yen and euro yen. I mentioned actually specifically pound yen yesterday, saying that keep in mind we are in a we're either in a triangle, if you want to look at it, we drew that on the 4-hour chart, or in a rectangle. In both cases, support is roughly at 144. We are getting close to 144, but I can't turn bearish as long as we're trading above 144. Okay, so you like it to the downside. You want to see a break below 144. In that case, I would expect a continuation lower. Okay. Now, having to do with euro yen, there it is. Euro yen backtesting this descending channel as support, the channel's resistance as support, also horizontal support area. So if it is to remain, bullish, it has to catch a bid, here. Other than that, as I was saying yesterday to another friend that asked, look at this price action. Do I want to do something with it in general? No, I don't. I'd rather do absolutely nothing with that. I mean, better opportunities out there. In my opinion, just, don't get involved with it at the moment. Why not, look at something that from a technical perspective is much, more clear, much easier to read. Now, we have a question about USD TRY. So USD TRY still appreciating so far in an orderly manner. There is no question about it. There is central bank manipulation here. Keep in mind that the Financial Times were writing a few days ago, I mentioned in the chat room as well, that from what it seems, foreign exchange reserves are not that well as people expected, because Turkey still has several billions, but as it seems, they actually had to borrow money to increase their foreign exchange reserves, which means that the situation is not that good, which means that you should be very, very careful. The next area of resistance is at 597, but keep in mind that, as Blake has mentioned, the central bank, to fight speculation, has made it extremely, extremely expensive to hold the Turkish lira overnight. To be against the Turkish lira overnight, which means that you have to be very, very careful. You would rather wait, for some kind of an acceleration before you commit, in being short the Turkish lira, because it is expensive at the moment. Now, if you want to be long the Turkish lira, which has a nice positive carry as well, the 6 level is a previous area of support. If we see some kind of a reversal from there, I think that then we can push to, lower once again. So I'm monitoring this level 6. This is where I drew this line from. Let's see what happens from there. So we're getting close to resistance. Keep an eye on that. Gordon says, pound Kiwi ending diagonal, pound Kiwi 61.8 retrace of October high to December low. Let's have a look at the pound Kiwi. It might be, I was showing that yesterday, showing that this is a wedge. So from a basic technical analysis perspective, you want to have a look at it. This is a wedge. Now, let me throw you a freebie, since you like Elliott waves. Instead of me giving you my Elliott wave opinion, let's get you Gregor's opinion. Gregor is going to be with us on Friday, by the way. So here is what Gregor thinks. As you see, Gregor thinks that this is a double zigzag. An ABC X, ABC Y as a second wave, as you see. So Gregor is bearish. But from, sorry, for our chart, Gregor is bearish from, roughly here. So, he's bearish from anywhere here. So he expects a reversal lower. And as you see, the daily chart also, even from a basic technical analysis perspective, points to something like that, because this is a nice wedge and we're currently testing a confluence of resistances, the ascending trend line resistance from the wedge and the 61.8. I have that on my chart. This is what you mentioned as well. So I agree with you. I like it to the downside. Would I be selling it right here, right now? No. Why? Because I would rather wait for confirmation. What would constitute confirmation for me? A nice reversal, so a candlestick signal, and then a breakthrough this triple confluence of supports, the 50 DMA, the 200 DMA, and this ascending trend line support, all of them currently passing roughly from 192.80. If I see a break below that, I will really, really, really like it to the downside. Okay, Gordon, my pleasure, mate. Let me go back to questions that we had earlier, because I think we covered that, and that did. And Gregor have a countdown to 111.7. What ticker are you referring to, Costa, about Gregor's count? For which ticker? Because it's not clear here. Did not Gregor have a count? Probably something that Blake was mentioning, I'm guessing, from the level. Was it the euro? USDMXN is booming. We have somebody mentioning. Let's have a look at the USDMXN, because I actually showed the USDMXN yesterday, saying that look at it on a daily chart, but most importantly, look at it on the 4-hour chart. I said yesterday that USDMXN is likely building a little rectangle here, and look at this. We're currently on the rectangle's resistance. So if we do break out from here, expect an extension higher towards 1925. So a break higher from this resistance is a technical event. We trigger a double bottom, in which case the implied target, as I said, is at 1925. So thank you for mentioning that. Currently in resistance, so I wouldn't be buying it here. But if you want to play it, from technical perspective in a right way, the best way, in my opinion, is playing it like this. Okay. So waiting for a little break up. Hope for a retest of the breakout area, and once you see that holding, then I think it's a great opportunity to buy it, and then expect for the double bottom target to be fulfilled at 1925. So I think I covered all the questions. We're exactly at the top of the hour. Coach, who do we have for an interview today?
Vladimir Rybakov.
Vladimir Putin. That would be very interesting.
Do you know Vlad?
I know of him.
Okay. Yeah, he's a great trader, and big position trader. I don't think he uses much leverage. Anyway, I'm going to ask Vlad a few key questions, and Steve, as always.
I thought, from the introduction, I thought that you would just ask him to sing with you, useless leverage.
Oh, yeah. I don't have to play for him. He lives it. So
yeah, that's right, because you told me that that's his way of trading as it is mine. So perhaps we can have a core.
Okay, if you have any questions, Steve, like usual, feel free to come in.
Unfortunately, Coach, these have been very busy days for me, so I have to jump immediately with another meeting. So I'll see if I can hear if I can listen to the interview afterwards from the recording. Okay, thank you very much.
You're welcome, Steve.
Bye-bye.
Hi, Vlad. Welcome back to FaZe, my trading warrior brother. Looking forward to talking to you. I've just made you the presenter. So, hi, Vladimir. How are you?
All good in our wood. Thank you very much for inviting me. Second round.
Yes, it's a return visit by popular demand and a vote of one from me because, my mission is to build up edified traders every day, and by bringing in people like you, we learn from everybody, and especially guys that make a living off the market. So welcome back. Looks like we're gonna start off with what's on your menu is the silver daily. Why don't you tell us about it here?
Just by mistake, don't pay attention.
Huh?
It's there just by mistake. I was analyzing well, mistake, half mistake, but this is the one of my favorites, and also this one. So we'll share reviews soon. Then, how are you? How is everything going?
Good. Everything's good. I'm having a little trouble talking today. I spent a day at my friendly dentist yesterday, but I know that you could carry the day with the things that you're looking at. So I might be a little surprisingly quieter than I usually am. But let's start here on Euro, Vlad, because the dollar is threatening a breakout that everyone felt was a layup for quite some time over 97.85. Euro testing recent lows. What's your view and what are you thinking and doing in here?
All right. So there are several things I prepared actually for this conversation. So hello to everyone. First of all, once again, a wonderful day to all. It's 9 a.m. here in Toronto. Let's begin.
Sister city of Chicago. And the name of your company, Vlad. The name of your company where people trade and you mentor.
I'm the owner of Traders Academy Club. I can show quickly the website. This is my club, and I'm running this pretty popular trading blog. VladimirRybakov.com stands exactly for my name. That's my main two activities. This is where I have my live trading rooms on daily basis. Just in case anyone wants to go and explore. The dollar is again skyrocketing. Not sure how directly dollar it is related. More like the global weakness of the rest of the currencies. You mentioned before with the conversation of Steve, I think it was, that I am a long-term trader. And I hold my positions, and I'm not using leverage. 100% true, all of them.
I remember like Giuseppe telling me that you traded off a lot of your stuff was weeklies, and that you didn't really bother yourself with the little jiggles for your position trading. So I'm glad and fine to be corrected. So tell us about your style.
My style basically was developing over the years. I started as a very short term because I didn't have the money to trade with. As simple as that. So I had to take more actions. I had to take bigger risks in order to try and grow a bit faster. So I started from scalping, to be honest. Then I went more for short term on the 1 hour chart board. And as I grow on the way, I discovered the long term slowly, and I found that the flow of money in this chart is so much more attractive than the intraday trading. Yes, it's way more boring. It's definitely not for everyone, especially not for all those who don't have the patience and don't have the capitals. to work with that style, but it's much more rewarding. This is something I learned over the years.
How many years before you had that epiphany?
Well, I do that for living from 2000 completely, from 2012, 13. So that's about 6-7 years now.
Okay. And you mentor people. You know, I always ask guests this, Vlad. You know, a lot of people think they could just, you know, open an account and trade. But I've noticed, I'm curious in your answer, how many years would you say it took you to become consistent, have breakthroughs, and become a trader who could make a living off the market? How many years did it take you?
About 7 years.
Okay, so I hear anywhere from 4 to 7. So yeah, so when people come in to your, to your website and work with you, do you lower their expectations and tell them that the secret to trading is hard work and perseverance, and you can't learn experience? It only happens with the passing of time.
100% yes. I personally am a believer not in the length of the period, like the period you have behind you, because there are traders in my club that trade twice more than I do and still lose money.
Yeah.
Constantly. So the experience doesn't come with the years. The experience comes with the conclusions you do on your positions, the losing one and the profiting one during these years. If you take the right conclusions and you are able to listen to the market and you are able to listen to yourself and try not to repeat it for the next time, you'll be good.
I learned the most from my mistakes. How about you?
Sorry?
I learned the most from my mistakes. How about you?
Unfortunately, I'm pretty stupid. So because I refuse to listen to other people good recommendations. I had to go through all my own pain, and that's one of the reasons I am mentoring. Also, I want to be to traders the same thing I didn't find for myself when I was growing.
You didn't find anyone that really opened your eyes to things. You had to go through a trial and error, self-taught, 100%.
Correct. There were many amazing speakers, but there was no one that had a message for me. Many know to show the charts backward and say buy here, sell here. Of course, it's very popular even nowadays. But the person who is a message, person that can explain logic behind the steps, I couldn't find. So I had to go through that all myself, unfortunately.
Okay. Yeah, it all worked. You know, it's not how you start the race, it's how you finish it. So why don't you tell us what you're thinking here with the euro pressing against recent lows?
Yeah, well, so I think we are approaching to a very critical level. My style based on weekly and daily combinations mainly, and cycles. Cycles, basically, that's representations of a money flow. And on the weekly chart, we can see here a beautiful two-wave structure, while each of these waves is a cycle by itself.
Yeah.
And the levels we can see here, that's surrounding the 110. I said surrounding because it's, in my point of view, it's impossible to point an exact level. Right? Many traders try to say, okay, from 111 or 110.75, it would reverse. It's impossible to name an exact level in not a perfect market condition. So it's that's my view.
Okay. So I see those pink boxes there. There's, it's a range of different levels that it could hit. How do you come up with those pink boxes? What a tool?
We develop basically scanning backwards and find reaction levels.
Oh, looking left?
Yes.
Okay.
So basically, from historical available data. Now, this is a critical level here, which I marked for two reasons. First, it's a Fibonacci expansion level, which represents a possible, here we go, right here, a possible reversal area based on Fibonacci's. The whole idea here is to, when 61.8 8 level comes in play is to check that the second leg is longer in its period of development than the first leg. The other reason here is the psychological 110. This is a massive number. We would very likely see some good fight there between the buyers and the sellers. And the third thing, which I love to pay attention to, is clearance zone. A lot of early buyers love to protect most recent swing points. This is the most recent swing points in the rally upside. And a lot of stop losses would be placed right below this area. Now, if we manage to clear,
where is that area, Vlad? That low of that area there?
Around 110.50.
Oh, okay.
So this level is 111. 110.50 is
okay.
61.8. Sorry.
Okay, so this is an area where people who rode the rally are protecting long-term profits if it takes that out, and there's plenty of liquidity for the algos to go in and cover their shorts when sell stops are elected. Right?
Correct. And I do expect here a good fight. Now the whole thing is to drop to lower time frame and to make sure the daily will fit in the weekly. What does that mean? As I showed before, each of the weekly legs, this is the weekly legs, that's what we see here and here, in terms of the development, right? One weekly leg, second weekly leg, each of them is cycled by itself on daily, and each of them comes and ends with what I love to rely on, divergence. Now, we don't know now to say where the divergence will that at all tick and become activate. But normally, when you combine all these things together, it does. So when this becomes a bullish turnaround, and we start to see some bullish candle structure right on these areas, again, 111 and lower, closer to 110, this would be a very good place to start look for bullish opportunities. Then you can go and squeeze lower to lower time frame to find the, let's say, maximize the opportunity, right, or optimize the opportunity. But
okay,
the first thing
what do you drill down to for entries? What TF?
Now, my personal preferred two styles are, first of all, to see the reversal by false breakouts. So when we come to the end here on the lower time frames, this is what we should see. A fake attempt to keep creating new lows with a reaction upside immediately. Mm-hmm. And from this moment, we switch and turn for higher highs. So that will be the first time where we can start to see the pair creating higher highs. Okay. And the second option, which I love to see, is when we reach a level, a reaction should be in pure price action or bullish trend definition. And the definition for a bullish trend is higher highs, higher lows. So once we see 3 higher highs, higher lows, that's a good, reliable assumption to believe that it's time to start looking for retraces and buys.
Okay, so let me ask you this. This we probably will get some kind of reaction here from this 110.40 level that you've identified. But what if it's a bottom and not the bottom, and we go to your lower pink area, which is the Macron gap of the French election? How do you manage risk if you start going in at 110.40 and we could go to 105.60?
So that's a wonderful question, and that's exactly why I said I'm not just attacking a level. I do want to see a reaction. Reaction comes by candle patterns. Reaction comes by one of the things I mentioned before, false breakouts and higher highs, or the turnaround of a bullish trend. If it's still not enough and the market will retrace down, of course, I cut my positions. The way I do that is, let's assume we are getting the 3 higher highs, higher lows, and then we just do one straight leg correction below all the Fibonacci retraces. So what I do is I mark this rally, and I see the Fibonacci retraces. If it's one straight leg below 61.8, what I do is healing my position.
Great method. Like it.
Never, ever fight the market. Market knows best.
Yeah, I've done it. Okay, so nice look on Euro. You said you had some other instruments you wanted to share. Oh, the Aussie Kiwi. Okay.
Aussie Kiwi was also one of those we discussed with you the previous time we met.
Yeah, I remember. And it was you were looking for a low, and we did rally for a while before this recent decline.
Well, my view was
it. Yeah.
Fine.
Beautiful. Okay, so that was a great call. Nice move.
The same view exactly. So what I see here is still the same long-term cycle I rely on. Don't be scared with the monthly chart. It's just there to define cycles. This is a special cycle. Special cycle is a simple condition when the first leg. I'm
so scared. My hair is turning white.
Sorry.
I'm so scared looking at a monthly chart. My hair turned white. I know you said don't be scared looking at a monthly.
Yeah.
I think people should be scared not looking at a monthly. How about that?
Love it. Simple, love it. So the idea here is that the first and last leg, they are pretty much equal in size. The second one is double or triple X. Mm-hmm. So this is pretty much, or for those who work with Elliott waves, they will easily see here 5 counts. Mm-hmm. So basically the way I see that is we are now in a corrective phase. Corrective phase goes in one of the two structures normally. 2 waves, ABCD, or ranging cycle. We can still face these 2 scenarios. That could be A and that could be the B or ABCD completely. Mm-hmm. Or we can go and work with a range. Now, range is defined when you're facing 2 opposite false breakouts. And we did. This low was false broken. Breakdown and retrace.
Right.
This top was false broken. So that
they always do that to people.
Yeah. And that's what define a possibility of a ranging cycle to begin, which in that case really did. So what's next? I still think we are in a corrective cycle, meaning that for the long run, I still think we are going this way. Now, when we squeeze lower, and it's funny to call weekly lower, but that it is what it is. I have here a clear movement, straight leg, mm-hmm. from one band to opposite in the Bollingers. It's another technique I love to apply just for visual confirmation. We do see some slowdown by creating a bearish hidden divergence. So it's very, very normal to assume that we are going for some kind of correction here now.
Yeah.
And from the area of 106 down to 104.50. Sorry, bad drawing. But this is a critical zone here.
Right.
I believe we should be looking for the next possible buy evidence.
Back to the top of the weekly range. 112-ish.
Definitely be around 109 and higher.
Okay.
And the idea here is simple. I want to see is the drop, a bullish hidden divergence, which means the MACD would have to create a new low.
Higher low.
To the previous time, and that would be a good confirmation for a high probability for a trend continuation.
I think, Vlad, would you mind taking a minute? A lot of people understand divergence with RSI and everything. Not as many understand hidden divergence. Could you give us a quick...
I'll try to explain this logic in a few sentences.
Go ahead.
Hidden divergence is trend trading divergence. Normally, people do treat divergences as a reversal tool. Hidden divergence is a representation of, again, high probability for a trend continuation. What is the logic standing behind that? Pretty simple. If during this move down, the lowest point that the sellers managed to create, looking on the MACD, it's right here. I'm looking on the histogram, not on the
Okay.
Now, if after a correction, we do see a new low on the histogram, but on the chart, the low is higher than the first one. The logic that stands behind it, that in this move down here, there was so much money involved. The sellers were trying to push so heavy in terms of numbers. And they failed. Failed in terms of what? Failed in terms of creating lower low.
Yeah.
If so much money was involved in the correction, and it's still only displays low, which is higher significantly than the first low here, that's a good assumption for this trend to continue. This is the logic standing behind the hidden divergence.
That was great. You're natural.
Thank you.
Go ahead.
Now, the very important thing here to remember for hidden divergence, because it is a trend continuation, you do want to do verification by two things. One, higher time frame does support your bullish assumption by any of the analysis you do, channels, trend lines, divergences, and so on. And the lower time frame would actually go and verify your reversal. And that could be, let's say, some trend line and a breakout. That could be a bullish divergence by itself on lower time. But you do want to see the reaction coming from all these three time frames, higher time frames, not to be against you. Why? Because you are looking to join the trend. And the lower time frame to support you. Why? Because you do want the pretty much best odds opportunity. And the best odds opportunities come when you have verification and synchronization in a few time frames.
You could have been a great attorney, because isn't trading like being an attorney? You build your case, and the more evidence you have, the stronger the case.
Maybe I will one day. I heard they're looking for a good one in Canada, in Ontario.
Anyway, so yeah, nice case built on Aussie Kiwi. And what did you want to wrap it with, buddy?
Thank you, sir. Now, we plan our trade. We will have to trade the plan, assuming the conditions we make. Once again, what are the warning signs here? If we get a straight move, if we just go one straight move, crossing through Fibonacci retraces, not building up the conditions I am expecting here, that would be a sign that the market is not ready to provide me what I am looking for. That will be time to abandon.
Okay, so under 61.8, you abandon this idea.
Yeah, if it's one straight leg. If it's making like two legs correction, no problem.
I see. So in Elliott terms, if it's impulsive rather than corrective.
Correct. If it's impulsive wave, impulsive leg, game over.
Hey, you know what, Vlad? Do you know why Aaron Elliott, every time he was outside, he would keep waving to people nonstop? Because he was impulsive. But you know what? His wife was corrective. Is yours? Is yours? Anyway, Vlad, why don't you just show your website again and how people could follow you? I learned from you today. I got a clearer definition of hidden divergence. I'm a big fan of divergences, and I'm going to start paying attention to hidden ones too. And really, yeah, really, I probably don't have to, but wish you and every mentee whose words you hear your words and your teachings that pips rain down on them, and you too, my trading warrior brother.
Thank you, sir, and I wish you the same.
Thank you, man. So there you go. There's Vlad's website. The address is tradersacademy.club.com.
Tradersacademy.club.com. This fact dude is right me, right here. The idea is very simple. I'm running here my live trading rooms, and we have our special dedicated groups for traders here. We're about 700 people in the club.
It's a nice club.
The goal is very simple, to be for traders what I didn't have when I was growing. It's going well. People love our job. You can see the reviews and the value we get, so we give. So I hope people love it. That's. Do
you have like a little TV studio going there, or is that in your office where you're sitting there talking to somebody?
Yeah, I do. Actually, I have a little. Well, it's not a studio, but it's kind of a place where,
It's a nice setup. Yeah. Cool. You're like the FX version of Wall Street Week.
Something like that.
And thank God you're there to compete with Online Trading Academy. That's all I could say, because people shouldn't have to pay 40 grand to learn support and resistance. So anyway, thank you so much, Vlad, for being here and coming back. And you know, I'm going to keep an eye on these things here. And thank you for edifying our community. Mission accomplished.
Thank you, sir, and a wonderful day to you and everyone who listened. Thank you for your time and for your attention. Thank you.
All right, buddy. That's Vladimir Rybakov, and that's his Twitter handle as well. You're welcome, Elena. Do you have a trial, Vlad?
No, we don't have a trial in the academy, but we do have 45 days of complete money-back guarantee. It's again, if I can't help, I never force one to stay with us. We keep it completely open. So
nice policy. Okay, that's a wrap for us today, everyone. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. Good hunting. Go join Blake and the boys in the members chat, and I'll see everyone tomorrow. Adios, and thank you again, my trading warrior brother, Vladimir Rybakov.
Thank you, sir.
Adios. Shalom.
Shalom.